So thank you very much, Ms. Momina, for your time, for being here, and we are really honored to have you being the Global Head of Microfinance at IFC at the first Microfinance Bootcamp here at BC Durban. Maybe request you if you can kindly share about the work which IFC is actually doing in this sphere, and particularly your experiences of Chinese market, because these days we are very much connected with China with reference to CPAC. But we would like to know your thoughts and learn from your experience that what is your message to the microfinance players in the country, that what are the things from which we can learn from China.
Thank you, and I'm delighted to be in Pakistan. I think it's a very interesting juncture for the Pakistan Microfinance Network as well. Part of what IFC is doing is leading the work in universal financial access, that by 2020 most adults should have access to a basic transaction account. And we have a number of partnerships around the world to meet this, which includes obviously with China and Financial, which is the financial services arm of Alibaba, as well as Baidu, the equivalent of Google, various banks and telcos like Telenor, but also the Pakistan Microfinance Network and PMIC. So as part of that, PMN has made a commitment that through its members, it will be able to reach 20 million people by 2020. And obviously that's a huge challenge, because that means not just incremental growth, but exponential growth. So as part of that, and globally, just to put it in context, Pakistan is one of the 5 key markets where there are a very large number of unbanked adults, particularly women. So men are 5 times more likely to have a bank account than women, or some kind of transaction account than women in Pakistan. So obviously, as a Pakistani myself, and seeing some of the gender statistics, it was very important for me to also see what are the issues in Pakistan. Why are we not scaling up relative to other countries? Because we do have a very supportive regulatory framework. We have a number of players who are very active in this space, leaders such as Kushali, Telenor, NRSP, who are engaging. So part of, I think, what we're learning through our microfinance portfolio, IFC has an investment, and we work with roughly 300-400 microfinance institutions. We also run a strategic leadership course with Boulder. We're also very much in the SME space as well as the digital. So one of the lessons we're learning from this is that scale is key. So for institutions to be able to reach scale in their markets is really critical, to be able to change the market. So by which I mean operating in the north of 1 million client range. And for that, what seems to be critical is just 2 aspects. One is a risk-taking appetite. So for those of you who are active in this space, really to go out and lend more. And the market demand potential is significantly huge for Pakistan, and particularly in 3 key areas: gender, women. So women is one bucket. The agri space, so to be able to reach smallholder farmers and farmer finance. And the third is to be able to leverage technology and innovation to be able to do that. So obviously the Chinese coming into this market will be a big game changer. So Ant Financial and the work that they do in China, they're able to offer loans and lending products within 3 minutes. And the ability to do that is critical. I think secondly, the Pakistan microfinance sector, like most other markets, institutions have suffered from 2 issues. One is the higher cost of operations, and the second is efficiency, So loan processing efficiency. So if one can address those 2 issues by leveraging technology, then I think it will be much easier for institutions to be able to do that. So a lot of our focus, we're doing about 30 deployments even in Africa with microfinance banks going digital and leveraging technology. It's very critical to address those 2 aspects. For that is what clients want. They want cheaper, faster, convenient products, in their markets, whether it's in the payment space or in the lending space. So a lot of our focus is really to do that. And I think Pakistan's at an interesting stage within the microfinance sector, because a few years ago people were considering digital strategies or whether to go digital or not. Now digital has to be part of one's overall strategy.
No, it's not a choice, it's something
which is just integral. And I think as the digital economy expands, here with merchants coming on board, it will be easier to do that. and really be able to scale up in this space, because the costs to client will end up being cheaper, right, for institutions. So my advice would also be to look at different models, what's working in India, what's working in China, what's working in Kenya, and see what the local version of that can be. Because I think even within those, and what you're seeing is innovation is not necessarily coming from the biggest players. It's coming from smaller niche players and smaller banks and microfinance institutions, which have a much better handling of the clients that they're reaching. So for those NGOs or RSP programs who are really embedded in their local communities, if there can be product innovation, etc., tied to that, then that can have a much bigger impact actually in terms of, so even there are two aspects. One is like reaching the unbanked, those who are underserved, but also those who you do serve, right? I mean, just as an example, some of the work that we're doing with CFPA, the largest microfinance institution in China, they partnered with that. So as a one of the learnings we're getting from that is even leveraging a little bit of technology and focus on credit and data scoring, that they would probably revise their projections from 300,000 people to reaching 1 million clients within a year. So it's taken them 10 years in order to reach that.
300,000, and with technology,
they can triple that. And a lot of the deployments we're seeing are like that, like in Africa, that by changing, like by using agents or digital channels or being able to digitize part of your credit process, that it has huge implications for significant for efficiency gains as well as product improvement.
So what you mentioned is like with CFPA and financials from China, we can learn as a case study. Just last question, your comment, because as you mentioned that to reach to the targets of 2020 set by Pakistani players in this field, you need exponential growth. Like they're talking about 20 million clients. So what do you think is stopping, or if I may ask you, that what are the 3 key challenges or hurdles due to which the scale is not coming up? Like we have got excellent regulators, we have got very dedicated HR in the field, great MFIs, MFBs, people who are very educated, professional. So what do you think, based on your experience, if you narrate all the stories from China, Africa, other markets, Central Asia, who have achieved scales, but we are yet to actually reach there. So if you can just share your experience, maybe 3 or 4 factors which our players can consider and take into account.
So one is clearly the increased risk appetite, right? To be able to, I think a lot of the sector here at the moment has portfolio risk, amongst the bigger players at 1%, which in a way is really good, that you're very good at what you're doing and NPLs are low. But it also means that you're not taking enough risk, right? So there are newer products and segments which you can tailor-make products for. The second is really seeing the underserved in your market. So whether it's at the very local, so if you're in a village in Rahimia, are we serving all the potential market segments that we could do? Is it the farmers? Is it the farmers' wives? Is it some of the larger scale farmers going into maybe supply chain finance, segmentation,
one of the issues.
And then increased credit scoring probably, which can then also use leverage digital channels. So when we look at how one can expand, I think there are 3 aspects to it. One is that you're using, like you have a strategy to be able to do so, right? And you implement that strategy. So like PMN has numbers to reach 20 million, so that's the big picture vision, right? But then the second is really, okay, what can we do in-house ourselves, and then what do we need partners for, right? So the increasing number of fintechs and potential partnerships also allow you, scaling up in that space. And then the third is really implementation. So what can we do on the ground? Because it's critical then to have your loan officers buy into this. They know their clients the best, right? So to be able to tailor-make products for those segments, which can be done within the local context. I don't think it's enough just to have a Chinese model or a Kenyan model operate here, or an Indian model. The idea is how can we localize it for our existing, given the cultural norms that we have, given how merchants operate, given the RP system and how that is. Right? I mean, even when we were talking about Khyber region, and how can one break down, offer a choice to the money lender or, to the middleman, right? And it's only through offering choices, through convenient products, that one can
Thank you very much for your time. Really appreciate it. Thank you.